Is NVIDIA a good investment? Let's run through the bull and bear case quickly to find out. My name is Brian Feroldi.
And my name is Brian Stoffel.
We recently ran NVIDIA through our investing frameworks. Here are the key things you need to know. What does NVIDIA do? NVIDIA is a pioneer in the hardware industry where they focus on GPU, graphic processing units. These are chips that are inside computer hardware that essentially make gaming work and high-end visuals work on the computer. This has been long used in the gaming industry, but over the last couple of years, NVIDIA has expanded well beyond gaming. It's now used by creators, streamers, people that are involved in virtual reality. It's used in the cloud. It's used for high-end processing. More recently, they entered the data center market, and they're using their technology to help data centers run better, which has been a great growth avenue for this company. There's also a pending acquisition right now where they're getting into the CPU market, thanks to the pending acquisition of a company called ARM Holdings, and they plan to take GPUs, CPUs, and DPUs and integrate them together to become a true powerhouse in the industry. Another growth avenue for this company is autonomous driving. NVIDIA's chips are going to be installed inside cars to help them navigate roadways. If you believe that autonomous driving is here, they are going to need companies like NVIDIA to help them do it. And then finally, more recently, they announced this NVIDIA AI Enterprise platform, which does a great job of incorporating software and hardware together to enable companies to take advantage of AI. That is helping to widen NVIDIA's moat by combining software and hardware together. And if you look at this company's results over the last decade, they have been nothing short of phenomenal. Even at this company's huge scale already, in the last fiscal year 2021, revenue grew more than 50%, gross margins expanded to more than 62%, and earnings per share grew 53%. Financially, this company is a true powerhouse.
So there's a lot to like here, and let's just go over those real quick. Some things we didn't even mention, like the fact that this is a $500 billion company that's been around for decades, and it's still founder-led. Jensen Huang was the pioneer and the creator of the GPU, and he is still on board. The company has an enormously powerful balance sheet, lots of cash, not that much debt, and they are bringing in tons of free cash flow, which means they can research whatever they want to expand their business. There are high switching costs involved. This is like computer chips 2.0, where these chips are used in more systems, and once they are put in, those switching costs are not insurmountable, but customers are bought into using them for the long run. And if that wasn't enough, the combination, as Brian talked about, of software and hardware makes those switching costs even higher, because you can switch the chips, but if it means you're going to have to switch the software along with it, customers are loath to do that. And finally, there are so many applications for this. If you were looking to invest in NVIDIA back in 2010, it would have been purely based on gaming. You would have never been able to guess all the things that it's used in today, like data centers, cars, for cryptocurrencies. What will this technology be used in 2030? We don't know, but the company's history says that whatever the next bleeding edge technology is, there's a good chance NVIDIA is going to have a hand in it.
The bull case for this company is very strong. So what is the bear case here? First off, just the nature of selling hardware, that to me means that most of this company's revenue, the vast majority, is non-recurring in nature. Yes, there are some bleeding edge gamers that will always buy the latest and greatest chips. However, for someone like me, once I buy a high-end NVIDIA chip, won't I just use that for 4, 5, 6 years until I absolutely have to upgrade? That's just a feature of consumer tech hardware that I don't like. 2, this company's margins have been on the rise for years thanks to all the incredible growth that it's seen. If you look at the history of any consumer products, there is always long-term pressure on these companies to lower prices, and that can lead to lower margins. If that happens, this company will struggle to grow. 3, while these products have been in demand in numerous industries that are growing, total demand for this company's products tend to be a little bit cyclical. During downturns, you can delay the purchase of many of its products, and that has caused this company's revenue to fall historically. Finally, technology moves extremely quickly. 5 years from now, 10 years from now, is it possible that another technology will come along and make these GPUs irrelevant? We don't know. That is something that consumers need to watch.
So let's talk about then how it did on our scales, because they were a little bit different.
So on my scale, NVIDIA scored 79, which is well into my investable range and just shy of being an extremely high quality business. If you look at this company's past returns, they have been phenomenal, and NVIDIA checks a ton of boxes that I look for in an investment.
When you look at mine, it got a 7.5, which means that it is still very investable. And what I'll say is that part of the reason that it didn't do as well is we had trouble finding a mission statement, which isn't a problem as long as Jensen Huang is there. But if something were to happen to him, I take that into account. Also, because I'm not an expert in this industry, I have more difficulty seeing how wide the moat is. People who are into the industry say that I'm worrying about nothing. They might be right. They've definitely been right so far over the past 10 years, but I still like to take that into account to know my own comfort level.
So what should investors watch moving forward? To me, the number one thing is the pending acquisition of ARM Holdings. This is a massive acquisition, and it could be transformative to the company, but it hasn't yet gone through, and there are question marks about whether regulators will allow it to happen. So as of the time of this taping, which is the middle of August 2021, we don't know if that's gone through or not. So that will be something for investors to keep an eye on. 2, keep an eye on this company's margins. They will tell you a lot about the long-term pricing of this company. So far, NVIDIA has done a phenomenal job at not only maintaining, but increasing its margins over time. If they were to start to fall over time, that would be indication that NVIDIA is starting to lose its edge. 3, look at the company's relationships with its key customers, which are primarily the hardware makers and data centers themselves. A few years ago, Tesla made the painful decision to switch away from NVIDIA and develop its own chip. It said that it was a necessity to do so. Is it possible that other companies could do the same? Yes, we haven't seen a lot of that happening, but that would just be something to watch going forward. Finally, this company has so many irons in the fire that could continue to propel its growth for years, but things like augmented reality are not guaranteed to come through. So you want to see that the company is capitalizing on those new opportunities as they develop. Overall, NVIDIA scored much better on my checklist than I thought that it was going to when I first went in. And that is just because I have a bias against chip makers and hardware companies. But there's no doubt in my mind, this is a very quality business.
And I've actually run this company through my framework many times before in years past. And this is about the score that it gets. And it continues to do very well. It underlines the fact that just because a company doesn't score well on my framework doesn't mean it can't be a great investment. What's really probably showing here more than anything else is my lack of familiarity with this hardware industry in general, and I'm comfortable with that.
To be honest, there is a lot of terms to get in here. When we were going through this company's presentation, how many times we're like, well, there's an acronym I've never heard. Well, there's an acronym I've never heard. So there is a high learning barrier to really understand what this company does. But again, if you look at this company's long-term history, there's no arguing with success. This has been an unbelievably fantastic investment.
Yeah, I agree.
Well, I hope you enjoyed this quick overview. Let us know what company you'd like us to research next. Brian, thanks for being here.
Thanks, Brian.